Welcome back to Roxham TV. I'm your host, Jeremy. We've got another packed show today, and honestly, a lot is moving in the market right now. We are going to break down everything you need to know from geopolitics to AI or regulation, and of course, crypto. First, we are starting with the big macro story. Donald Trump has delayed strikes on Iran and markets are reacting fast. Stocks are moving, oil is moving, and Bitcoin is sitting right at the key level. So the big question is this real de escalation or just a short pause before the next move? Then we're diving into tech because this one is crazy. Mark Zuckerberg is building an AI to basically help him run Meta or Facebook. And this is not just one company, it's also about how AI is starting to replace entire layers of jobs. We'll also cover regulation because things are getting messy. Kalshi is losing legal battles across the US while prediction markets are still growing. At the same time, Bitcoin is now being approved as collateral inside the US financial system, and that is, of course, a huge shift. And in DeFi, there's another reminder of risk. A stablecoin just collapsed after a minting exploit, so $25 million gone. We'll break down exactly what happened and what it means for the market. And later in the show, we have a special guest joining us. So Marcus Nunes, who is the CEO of Tangem Pay. We are going to talk about something very practical, like how you can actually spend your crypto in real life using a crypto card, paying with USDC, and what really happens behind the scenes when you tap pay. So if you've always wondered like how it works, like can I actually use crypto like normal money? Is it safe and how does it really work? You have to stay for this one. So let's get straight into the first news of the day before diving into the interview segment. So let's just talk about what happened because the situation is changing rather quickly. Donald Trump has delayed a planned strike on Iran. He extended the deadline by 5 days, thank you very much, saying there are now productive talks happening. And markets, of course, reacted immediately. Stocks went up, oil prices dropped a little bit. If you take a look at Brent crude oil, right now we're sitting at 101 dollars. So it's down significantly from its high, like it was reaching $120 at one point. Like because investors see this as a possible de-escalation. Now, here's the important part, important detail. Before this announcement, markets were already in panic. So in Asia, Japan's Nikkei dropped nearly 5%, South Korea fell over 6%. Trading was even halted at one point. So the mood completely flipped within just a few hours. But like here's a confusing part. The US said talks are going well, but Iran at the same time say there are no talks happening. In fact, Iran is claiming the US is backing down. So both sides are telling completely different stories. And let's not forget, like, what triggered this. Donald Trump had warned, like, if Iran blocks the Strait of Hormuz, the US could strike power plants, and Iran responded by threatening to fully close the strait and even mine the region. So this is very serious indeed. Now, here's the biggest issue. The Strait of Hormuz is basically shut. Even if it's technically open, ships are avoiding it and traffic is down more than 90%. So that means oil supply is still being disrupted. Before the delay, oil had already surged above $110 at one point, and this is spreading globally. Countries are already taking action. So they are cutting fuel usage, they are shortening work weeks, and they are also closing schools and businesses. This is starting to look like a global energy shock. And here's the reality. Even with so-called talks are happening, the war has not stopped. Israel is still launching strikes and Iran is still firing rockets. So diplomacy and conflict are happening at the same time. this, of course, creates a very unstable situation because every possible signal is followed by by escalation. So we have actually seen this pattern before. They claim they have talks, and then threats arise, and then we have the delay and also further escalation. So markets are reacting to deadlines, not so much to resolution at the moment. Right now, nothing is resolved. We are back to square one. As for Bitcoin, here's the key point. This relief rally, so if we quickly hop onto the price action of Bitcoin, like it looks like a very joyful rally. Of course, I'll give Bitcoin that. But like this relief rally basically depend on one thing, like what happens next between the US and Iran. Right now, we only have 5-day pause, so it's not a resolution. So the market is reacting to hope right now, not so much, not uncertainty. So speaking of Bitcoin, let's do a quick price analysis, price updates for Bitcoins before we move on to the second news of today. So Bitcoin right now is sitting at $71,000. So as I mentioned, we have been on this relief rally and we have been holding the support ever since beginning of February. So we drew this line, this rising support line, and we have been like ever since. So we have been trading here for 48 days. So for 48 days, we were holding this support trend rather well. Like it also align with the rising RSI on the daily candle as well. So this is a green flag that I'm seeing. But again, like zooming out, this still looks like a relief rally. So first weakness sign I spotted is the RSI finally have a breakdown to the downside. So we lost that support. Like we are getting close. So it could be just like a one deviation. We're gonna grab we're going to go back to the rising support on the daily, but like since we still haven't closed the daily candle above these rising support trend, like I'm putting this like on hold. Let's see how it goes. But like this could be an early sign that we're losing that relief rally momentum, that bullish momentum. So this is sign number one. And then sign number two, if we zoom all the way out to months ago, it does look awfully like another bear flag that we have spotted. So bear flag, of course, like if we do the resistance line, it's going to be something like this. So point being, these two patterns, they look awfully similar. If I'm not being crazy here, like you could write me a comment if you disagree, but like this does look like another bear flag. So that means another bearish pattern. It could be very likely a relief rally because like same thing happened in the previous bear cycle back in 2022 as well. We had like some relief rally in March or April, somewhere around that. So like this could be the case. So so there you go. So if we zoom closer, this does look like another bear flag to me. So we have been building the support for months before completely losing that rising support trend on the bottom, and then we break to the cycle bottom, so around 15.5k. That was the case in a previous bear market, but like it happens to be aligned, like to align with the March and April narrative. So if we especially zoom closer to this like massive green candle in the previous cycle, like that, okay, that two consecutive massive green candles. So we had a really joyful rally back in when is this, like March 2022, mid-March 2022. And if we take a look at the percentage, that is like a 24% in 2 weekly candles. So like that is a really joyful rally and people were like really happy. But like zooming out, it's just another bear flag that we have spotted here. So it could be the case, but like I just find the timing so aligned, so interesting because we in the previous cycle we saw that in March as well, and right now we are of course like in March, heading towards late March. So we have another relief rally at around the same month, same point. So that's something interesting I'm watching. And another thing, like why there are more signs towards a like proving this is a relief rally, is that okay? I drew this rectangle a month ago, weeks ago at the very least. So weeks ago. So this rectangle being the resistance at like around 77K to 80K, that is a huge resistance that I've spotted. Like the reason why I've got this box like weeks ago, a month ago, is because whenever we drop below, okay, like maybe touch this region, this rectangle, we either like bounce back rather quickly. So we didn't spend much time around this region, or like when we were skyrocketing, that was back in back in November 2024, like we quickly skyrocketed to a high of 108K. So we didn't spend a lot of like trading data, trading volume around this region. So that's why I put it right there. And how it works is like the previous support is going to be our resistance right now. And if we zoom closer to this relief rally, like nothing changed. Like, okay, we had a really joyful run. We pumped to 76K. That was quite something, quite remarkable for Bitcoin. But like we didn't even get to touch the edge of the resistance that we drew weeks ago. Definitely more than a month ago. So that's the point I am watching. So that is another weakness number 2. So yeah, I mean on the daily, on the weekly chart, like zooming out is just like another relief rally according to the previous cycle, and we could be seeing the bottom uh, around like Q4 2026. Based on the 4-year cycle, we're going to see the cycle bottom on 5th of October 2026. So that is still the timeline I'm watching very closely. But like despite, okay, just ignore the 4-year cycle because I know it's very controversial. Just ignore that for now. But looking at the pattern, judging from like where Bitcoin could possibly go, if we just take the bear flag, where's the breakout point, then yeah, that is definitely, so 60K is definitely not the bottom. So that's why, like, this is just a rough measurement, okay? So take the width of the bear flag, go to the breakout point, which happened in January 2026, and then we'll get like a cycle bottom around $44,000 or $45,000. So that is a level I'm watching. It doesn't mean that it's going to be the absolute cycle bottom, but because like no one could predict the future, no one has a crystal ball to know exactly what Bitcoin price will be. Like at the end of the day, we're just making smart guesses, right? So my strategy right now is like I got like a few heavier buy orders around these key levels. So please don't front run. Please don't front run me. That is my strategy right now. So like third point I want to mention, because like this relief rally in March, we are up 4.87%. Like that is pretty good. Consider Bitcoin is like a multi-trillion dollars asset. So if we only look at March return, that is not bad. But like the reason why we have such a rally, because like if we take a look at the previous 5 months, we had 5 consecutive red months, negative return. So like having a relief rally like this of like 4.8% is not like a very significant in my opinion. But I do want to mention, I just want to remind our viewers once again, like looking at the liquidation numbers every single day, like it's just like I want to take a moment to remind us that okay, in the past 24 hours, like there are $577 billion got wrecked. So these people got wrecked by using leverage. So both longs and shorts are getting wrecked, are getting liquidated. So during volatile time like this, I know some of you guys are very degen. You guys like risk risk a lot, but let's not forget, okay, a lot of people got ragged. So for trading, you really need to know what you're doing. Otherwise, you could be losing your net worth in a single night. All right, so let's shift gears a little bit. Let's hop onto AI, and Mark Zuckerberg is now building a personal AI agent to help him run Meta. So this AI is designed to pull information directly without going through layers of employees. So instead of asking teams or managers or reports, he can now get answers instantly from the system. And this is very important because it shows the real goal of AI is not just helping people, it's replacing the middle layer of work. So inside Meta right now, the shift is already happening. AI is now part of employee performance reviews. So workers are expected to see AI tools in their daily work. And internally, employees are building their own AI agents. Some of these tools can read your messages, they can access your work files, or talk to your colleagues for you on your behalf, even talk to other AI agents. So now, instead of people talking to people, you have AI talking to AI, and that is a completely new way of working. One internal tool of Meta is called Second Brain. Think of it like an AI assistant that knows everything. Like it can search documents, answer questions, and help make decisions. Some employees even call it an AI chief of staff. Meta is also buying AI startups that build these kind of agents. So this is not an experimental experiment anymore. This is a full rollout. Now, let's look at how Meta is changing its company structure. Like they are actually flattening the teams. So what that means is that fewer managers, cutting jobs, more direct workers, and more reliance on AI. In some teams, one manager now oversees up to 50 people because AI is doing part of that management work as well. And here's the key point. Meta has around 78,000 employees, but now they are competing with AI startups that only have 50 people. So the question becomes, how many people do you actually need when AI can do most of the work? Some employees say this is exciting, and others are worried about layoffs. And both are probably true. And this is not just a matter. We are seeing the pattern everywhere in a lot of the tech companies as well. Some companies are cutting jobs because of AI, others are hiring to build AI. So, for example, like we have this gentleman, Jack Dorsey here, and his company. So, um, Jack Dorsey, which owns Square, Cash App, will fall to less than 6,000 from 10,000 people. So that's the cutoff. That is the trend that we have been witnessing. Mark Zuckerberg, on the other hand, like he's building an AI to help him be CEO. Like, okay, this could be just the headline trying to grab attention, but the real story is this. AI is changing how companies are running the internal businesses. It's removing layers, speeding up decisions, and deciding the need for people, or reducing the need for people. So the big question is, in the future, how many jobs will still be done by humans? Because what we are seeing right now is just the beginning, and that's exactly what we're watching here very closely on Roxham TV. So we'll take a short break from here, and when we come back, we are diving to a legal battle for prediction market. And I hate to break it to you, Kalshi just lost a legal battle, and that is huge. So do stay with us after the break.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you, don't go!
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
How about Stretch preferred stock on Roxum? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxum gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxum to your clients. Corporate traders, asset managers, old, young, Stretch on Roxum is for everyone.
Now that's a birthday gift. 11.5% in Bitcoin.
We are in heaven at 11.5. 11.5%. 11.5%.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. So let's talk about what's happening here, because this is not just one company. This is about the future of prediction market. Kalshi has just been banned in Nevada. A state judge ruled its contract, so on sports, on elections and events, they are basically illegal gambling. And this is not the first hit. In the past 2 weeks, Arizona filed criminal charges as well. Massachusetts already tried to ban them, and more states are now watching closely. So this is turning into a nationwide legal fight. Now, here's why it's so serious, because Nevada is the biggest gambling market in the US. If you can't win your case there, it becomes very difficult to win anywhere else. A judge said Kalshi's contract, well, it looks like a sport pool, and under Nevada law, that requires a license. Kalshi does not have that license, so the court said you can't operate here. Now, this is where things get complicated. Kalshi said we are federally regulated. They are approved by the CFTC, which is a US federal regulator, and the CFTC actually supports them. But state regulators disagree. They say, like, this is gambling. So now you have a direct conflict. Federal government said it's legal, while the state government say it is illegal. And right now, the courts are siding with the states. Kalshi even tried to stop this in court. They asked for an emergency delay, but the federal court rejected it. That allowed Nevada to move forward with the ban. But like as for right now, Kalshi is losing ground state by state, and a bigger hearing is coming soon. If they lose that, the ban could become a long-term thing. Now, here's an interesting contrast. While Kalshi is fighting in court, Polymarket is going full marketing mode. They open a pop-up bar in Washington, D.C. People can sit there, drink cocktails, and watch prediction markets live. Things like war outcomes or political events, even extreme scenarios. But here's the twist. Most people there can't even trade on the app because it's still restricted in the US. So you have this strange situation. One company like Kalshi is getting banned, another company throwing parties out there. This tells us something important. Nobody actually agrees on what this industry is. Is this a financial market or gambling site? If you ask my humble opinion, it does look awfully like sports betting website to me. But like, let me know your opinion if you think is otherwise. So right now, the answer depends on like who you ask to actually. So regulators do not agree, courts do not agree, companies are moving anyway. So the bottom line is prediction markets are growing really fast, but regulation is completely unclear. Right now, states are pushing back. Federal regulators are more open and companies are caught in the middle. So the big question is, do prediction markets become a new asset class, or do they get regulated like gambling? Because right now, both sides are fighting in real time, and that's exactly what we're watching here very closely on Roxham TV. All right, so let's shift gears a little bit and let's look at Bitcoin, what's happening with Bitcoin and also CFTC. Speaking of CFTC. So CFTC is now allowing Bitcoin to be used as collateral. That means institutions can post Bitcoin instead of cash to back their trades. And this is not just Bitcoin. The approval also includes other assets like Ethereum and certain stablecoins. And this is happening inside the core of US financial markets. So let's break it down plain and simple. Big trading firms like future brokers can now accept crypto as margin. So instead of selling Bitcoin to raise cash, you can keep your Bitcoin and still open positions. And that is important because collateral is what powers leverage. It decides what assets institutions can actually use. Now, of course, this is not a free pass. They restrict controls. Firms must apply risk discounts, and meet capital requirements, and follow strong risk management rules. For example, Bitcoin and Ethereum get about a 20% haircut. Stablecoins are treated safer with around 2% haircut. So, in other words, the system still assumes crypto is very volatile. Firms cannot mix their own crypto with customer funds, of course, And only stablecoins can be used for certain internal balances, so everything is controlled and separated. This is not a full law change yet. It's what's called a no action position. In other words, that means the CFTC is allowing it for now while they study the impact. So for the first 3 months, firms must report weekly and flag any risk or issues. If everything goes well, this could expand further. And this is the why it matters. Like, this is the key takeaway. Bitcoin is moving deeper into the financial system, not just as something you trade, but as something you use as whether it's collateral, as infrastructure, or as the base asset. And that changes behavior, because if you don't need to sell your Bitcoin, you reduce those selling pressure. And this is a very quiet but powerful shift. Bitcoin is now entering the core collateral layer of finance. That means more institutional use. That means less forced selling and stronger long-term positioning. So the big question is, does Bitcoin become a standard collateral asset like cash, like bonds? Because if it does, that changes the entire market structure. And that's exactly what we're watching here very closely on Roxham TV. All right, so speaking of stable coins, let's shift gears. And there is another major DeFi failure and a constant reminder that how risky crypto could be sometimes, especially if you're involved into some DeFi stuff. So it's a stable coin. It's called USL, and suddenly depacked. And it wasn't market panic. It was a hack. A hacker exploited a bug and minted 80 million USL out of thin air. No real backing, no real collateral, because let's us just remind our viewers once again, when it comes to DeFi, code is law. If there's a bug, this is what happens. So let's go through what actually happened, how it worked, why the hacker managed to find this exploit. So the hacker deposited around $100,000 worth of USDC, but instead of getting the correct amount, they received 50 million USL, and that's about 500 times more than they should. Then they did it again and created another 30 million USL. So in total, 80 million fake tokens were minted. Once the tokens were created, the hacker moved fast. They dumped USL into the market, swapping it into USDC and USDT, then converted everything into Ethereum. And at the end, they walk away with around $25 million. Now, here's the key part. USL is supposed to stay at $1, but within 17 minutes, it dropped to 2 cents. That's basically a full collapse. Even though it bounced a bit later, it still hasn't recovered. Now, and then this part is important. Like the team said, the collateral pool remains fully intact. So the collateral pool is safe. Technically speaking, that's true, but that's not the real issue here. The attack didn't drain the funds. How it works is that the exploiters inflated the supply. So new tokens were created out of nowhere, which diluted everyone else. So holders didn't get hacked directly. What happened was that they got wiped out through inflation. And this is where it gets worse. The system had major weaknesses. One single wallet controlled key permissions, no proper limits on minting, no price checks, and no validation. So basically, no real safety controls. Even though the project had been audited, the core system still failed. And the damage did not just stop there. USL was used as collateral on lending platforms, so traders started buying cheap USL, then using it as if it's still worth $1. They then borrow real money against it. This drained liquidity from the system, so now you have fake value and you get real money extraction, of course. So this doesn't matter because it again exposed some bigger issue in the DeFi world than in the crypto space. Stablecoins are not all the same. USL was not backed by cash in the first place. It relied on a trading strategy to keep its price stable, and when the system breaks, there's nothing to support it. So the constant reminder for our viewers is that DeFi risk is not always obvious. Even audited projects can fail, and stablecoins can break very fast if the design is weak. So the key question we're asking, do users understand what backs these assets? Because in this case, it wasn't as stable as it looked. And that's exactly why we're paying attention here on Roxham TV. So we'll take a short break from here. When we come back, we'll be joined by the CEO of Tangem Pay, and we are flipping the conversation from risk. Now we're talking about real usage, how you can actually use stablecoins like USDC to pay in real life, even from a cold wallet. So stay with us. We'll be right back.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxham. One currency, one place.
How about stretch preferred stock on Roxome? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxome gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxome to your clients. Corporate traders, asset managers, old, young, Stretch on Roxome is for everyone.
Now that's a birthday gift. 11.5% in Bitcoin.
11.5. We are in heaven at 11.5. 11.5%. 11.5%.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxome. One currency, one place.
Oh, I forgot to mention, dividends on Roxome are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxome. 11.5%. 11.5%. run the scene that light up your face. I run the place, I run the space, I run the scene. Run the place, run the space, I run the scene that light up your face. I run the place, I run the space, I run the scene. Yo, are you ready for this? Are you ready for this? Are you ready for this? Are you ready? Yo, are you ready for this? Are you ready for this? Are you ready for this? Are you ready? Are you ready for this? Are you ready? Are you ready for this?
Dance all day and even all night. Yo, dance all day and even all night. Dance all day and even all night. Yo, dance all day and even all night. Make you go crazy, can make you start to yawn, can make you grab the microphone and turn the party on. But dance all day and even all night. I dance all day and even all night.
Yo, are you ready for this? Are you ready for this? Are you ready for this? Are you ready? Yo, are you ready for this? Are you ready for this? Are you ready for this? Are you
It feels good, man. It feels good, right? Alright, yo. I'm in the light at the end of the tunnel. Paper stacks, yeah, I got them in the bundles. Harry Potter breaking bread with a muggle. They said I wouldn't make it, now they looking puzzled. They said I wouldn't take it, how to go and hustle. Get the bag, it ain't never getting fumbled. In the jack, but we came up from the bottom. Through the cracks of the light pour in. Have a blast, got the drinks pour in. Take a risk like it's a short thing. Going in, yeah, I'm going all in. Getting flued out, yeah, you can bring a friend. Dive right in, let's go. Move forward and dip in your toes. Let the rhythm take control. It's going down tonight, yeah. Dive right in, let's go. Move forward and dip in your toes. Let the rhythm take control. It's going down tonight, yeah. I just do see you laters, no goodbyes. New flows, new highs, through the dark clouds, see the blue skies. It will be I, just you wait. It's a new day, ride in the storm like a new wave. Shake, 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 move it to the beat now. Got the heat now, deep down, we know. Dive right in, let's go. Move forward and dip in your toes. Let the rhythm take control. It's going down tonight, yeah. Dive right in, let's go. Move forward and dip in your toes. Let the rhythm take control. It's going down tonight, yeah. It's going down. Yeah, yeah, yeah. It's going down. It's going down. It's going down. It's going down, baby. It's going down. Going down. Yeah. It's going down. Going down. Going down. Going down.
let's go. Okay. Hey, you know that you broke my heart a million times.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. Now, earlier we talked about risk around stablecoin, but now we're shifting to the other side of the story. Like, how do you actually use them in real life? Joining us today live is Marcus Nunes, who's the CEO of Tangem Pay. He has over 15 years of experience in payments and fintech, and he's now building one of the key products bridging crypto and real world spending. And this is where crypto becomes practical. We are talking about how to spend USDC with a crypto card, how it works with a cold wallet, and what really happens when you tap to pay. If you've ever wondered whether crypto can actually replace your bank card, this is the conversation for you. So, Marcus, welcome to the show.
Well, thank you guys. Thank you for having me here. It's an honor to be participating in the program.
Yeah, it's great to have you here on Roxham TV Hong Kong. So, how about like since this is your first time here, why don't we start with a little bit background or a little bit journey? How did you get into crypto? Because I was going through your journey, your experience a little bit. You spent like, correct me if I got the data wrong. So you've spent over 15 years in payments and fintech before deciding getting into crypto. Like that is a very long time and very experienced indeed. Like, why don't we start with a little bit background yourself?
Yeah, probably some people were smarter than me, and by the time I started in payments, they started in Bitcoin, and clearly I'm still working, and they are probably retired. So, look, my journey was quite interesting and unique. I was part of a phenomenal team in the Netherlands that actually helped build a business, a global business, supporting banks, acquirers, issuers, processors, gateways, terminal providers. I mean, you name it. Anyone in payments that wanted to have access to Visa, MasterCard, American Express, Diners, JCB, China Union Pay International, you name it, any of the traditional global rails, they had to come to us for certification. And what we realized is certification itself is a very low ticket business, $2,000, $3,000 per certification, where projects to implement those rails can be on the parameters of millions, right? Especially large financial institutions when implementing things like Apple Pay or traditional payments in general, chip and pin, contactless, 3DS. I mean, there are a bunch of famous payment products. And imagine that these products are, 2010, 2015, 2020, 2025 technology, and they need to speak with a system from 1960. So there's several layers of integration. And soon we realized the money to be made was helping these financial institutions to understand how to actually connect, this technology with their backend. Within 5 years, we grew this business in over 30 countries, with local presence in 30 countries, Hong Kong being one of them. And obviously, we had, a much larger business, over $100 million in revenue. And why that matters is because I became very knowledgeable or very acquainted with anything related to payments from any part of payment segment, type of customer. So, and normally, if you look at payment professionals, they're either, they have a life in a bank career, or they have a career in acquire, or in a processor, or in a, gateway. So it's very rare that you actually understand how all those systems work. Long story short, but this took me 9 years, and we were acquired in the process, in very late In 2022, I met Stefan George, the founder of Gnosis ecosystem, which was the first application node within Ethereum. He was employee number 1 and 2, him and Martin of Consensus, the founders of Ethereum or MetaMask or Fireblocks, or you name it. There's a bunch of companies behind those guys, and that's how I got exposed officially into a payment project in crypto. We wanted to do a JV with a company I was actually the CEO at that time. We were the fastest growing fintech in the UK, and obviously, we were growing in an inorganic path. A lot of acquisitions became like a wedding party. If you were coming to us, the price tag was always higher than the actual market value for those business. So then we wanted to do something that would actually disrupt the back end. So we wanted to invest in businesses that actually made sense in the segment. And after spending the weekend with Stefan, I was convinced that we needed to redesign the entire technology of our business. And once you are bitten by this innovation blood, I very quickly understood that we had lots of work. So prior to Tangem, I was the founder of Gnosis Pay together with Stefan, the first debit card with a decentralized balance connected with it. We launched in over 40 countries. And then later on, I decided to make a journey with Tangem, which in my view is building a phenomenal product, that for the first time treats users like my dad, with simplicity, easiness to use. My dad is the Homer Simpson of this world. Doesn't want to have 12 sentences, words, whatever, in his mind. He just want to have access code and maximum a PIN code, and he should be able to spend his funds. He doesn't want to think about security. He doesn't want to think about custody. All he wants is to make sure his money is safe and he can access at any time as he wish. So a little bit of my journey. So many years in the traditional world, but obviously after 2022, no way back.
I mean, crypto is indeed a rabbit hole. Like once you get down to the rabbit hole, again, like how you phrase it, there's no going back. And I have personally been a Tangem lover as well. I've been using Tangem wallets for years. I've been talking about that on my community, not only on Roxum TV. So I run my own YouTube channel as well, being Gem Crypto YouTube channel. And right now, actually have a Tangem Rain. So this is being the cold wallet on my finger. So it is really convenient. As you mentioned, the simple UI UX is what I love about Tangem, because like when it comes to cold wallet, it's like people find it really scary. You have to write down the whole seed phrase. Like the whole barrier of getting into crypto is so threatening. But Tangem is one of the few companies that can actually lower that barrier significantly. So there is like a lot of questions I want to pick your brain on, because like you are very experienced when it comes to payments. So since you are from the traditional payments world before getting into crypto, like when you first get into crypto, did you find like how did you find it? Did you find like the whole industry was so like immature, everything is lacking of some infrastructure? So basically, what was the feeling when you first got into like from a very professional background into a newborn baby like crypto?
It's super funny, but actually, I saw gold. For me, it was very interesting to see the amount of high potential people with crazy capabilities technically. Like Stefan or Martin or the people they have introduced me, which I was fortunate to be introduced to, very technically capable. My feeling was if we needed to build a spaceship, in the garden, I was afraid of going to bed the next day, waking up and there's an actual spaceship in the garden, just as a trial. So that to me was the first impression. Gold in that sense. Very little business mind. And to be honest, it's kind of good and bad. In one hand, amazing, because you want to have disruption, you want to have innovation. And if it's too tight to commercials too early, you start diversing from the actual goal, which is to disrupt. And the downside to this, or less interesting, it was the zero business drive from the entire industry. So people would get together, discuss amazing solutions, but in my view, sometimes without a purpose to actually solve something meaningful economically. If no profit, not sustainable. If not sustainable, not long term. And that's how I was raised throughout my career. Even family wise, my parents are very entrepreneurial, even though they're both doctors. So for me, that was kind of a balance between all of that. Obviously, I saw more opportunities and more pros than cons, and I actually dropped a very, very, very interesting role and package financially and status to drive things from scratch. So it turned out to be the right decision. It paid off in multiple ways, and the most important was is relevance. These days, I speak in very large events to the traditional world, explaining the journey. How do we get things in a certain, matter, cost efficiency, reduction of integrations. So there's a bunch of things, the composability of the next generation finance rather than, concentration. There are a bunch of interesting directions that I was able to learn and to build the relevance for the next 5 to 10 years, at least.
Yeah, I mean, I agree with you. Like most people when they get into crypto, like you mentioned, there are pros and cons. But at the end of the day, like after weighing all the benefits and also the doubt we have, like the pros always outweigh the cons. So that's why you and I both doing content today, like doing interview today. So speaking of payments, let's also focus on Tangem Pay, which is you're the CEO of Tangem Pay, of the company. So like I have heard about Tangem Pay actually for like last year or 2 years ago. So it has been a while, Tangem, that working on the Tangem Pay. So like I wonder, for users like me who have been in crypto for a while, who have used other cold wallets, other cold storage options out there, how does Tangem Pay fit into the ecosystem without compromising that security?
Yeah. So, the funny thing is, when we founded Gnosis Pay, the idea was to do Tangem Pay at that time. And we met the founders of Tangem, very solid Swiss business, very, very, very bright people, Andre and Michael. And we discussed about making this joint venture between the three of us, Gnosis, that time Taya and Tangem. And that's probably when you heard for the first time Tangem Pay, because by the end of 2022, they announced that they were going to do this by themselves, or early 23. And then we decided to build a separate business with Gnosis for different commercial reasons. We thought it was more interesting at that time. So the interesting aspect, why Tangem took too long, is because Tangem wanted to build a truly non-custodial payment card, right? And for several years, I think for about 3 years, they were just, stuck in this process, stuck in this project. Essentially, you would have balance sitting in your hardware wallet, and your hardware wallet would be your actual card. And then you can sign the cryptography at the point of sale. And they managed to do like truly amazing things on the technology, to the degree that they actually got a certification from Visa to interact the hardware wallet to actually interact with the payment network in a fully ISO certified way. So I think it was ISO 13443 at that time. So it's like truly fantastic. And when I decided to join them, I kind of rolled back a little bit their plans, and I said, in reality, the world does not need additional security on this transaction level, because you have a network with a very clear liability definition between acquirers and issuers, or cardholders and merchants, that it would be waste of our times to redesign this network, right? At least not now, at least not with the current relevance that we have. Most importantly, that our users, they are holding balances for such a long time. And every time they want to get out of the hardware wallet and bring into the traditional world, the process of underwriting, proving the funds belong to them, and then putting in a spending account, it takes weeks, normally months, if sometimes they actually can make it happen with their, traditional commercial bank. So what I explained is the process is quite simple here. It's not about disrupting the security level, which in my view, I mean, if you look at fraud and payments, it's nearly imperceptible compared to the amount of volume that comes from security bridges. It's normally employment fraud, or at least 90+% is actually related to people that are working in financial institutions, providing access to others that want to, fraud the system, or terrible processes to understand if the customer is actually a customer or a fraudster. So with that in mind, I went to the other angle. How can we distribute cards fast and help monitoring transactions to make sure that we are able to detect fraud from behavior? In my view, that's what users want. They want to make sure, if I have 50,000 and I want to make a 50,000 transaction, who are you to prevent me, right? Like we should make everybody access their funds with the vehicles that we can give them access to. So I'm sorry. So with that in mind, we basically build a card that works in interaction with the hardware wallet. So what happens is the hardware wallet is where you have a full mechanism of storage for your wealth. And in that hardware wallet, it's not that your funds are sitting in the hardware wallet, but for you to access your funds, there's degrees of security you have to go through. And Tangem has never been hacked, and I call it the Swiss vault from the 1800s. But in order for you to spend, you want to make sure that the interaction between the card and the balance sitting in the hardware wallet account, or the accounts linked to the hardware wallet, that happens seamlessly. And the card is the vehicle that you can actually have interoperability everywhere. And after the card, you can have the ACH, wire, IBANs, big skis, and other financial rails connections, which allows users to pay by card or to pay by transfer. So that's kind of how I see the basis of what our user base wants. with over 6 million products distributed in the market, we need to make sure simplicity maintains as the DNA of Tangem, and not having, like 25 steps before I can go from storage, wealth to spending on the day-to-day.
Yes, I do have some more follow-up questions regarding Tangem Pay because, I do want to make sure the info I got is correct, or the whole process when a user deposit USDC and could pay directly using that USDC to purchase a cup of coffee. So, right now, from my understanding, Tangem Pay is not out for public to use yet. Am I got that part? Is that correct? So, for USDC, okay. When you have USDC in your Tangem wallet, you still have to separate into Tangem Pay and the Tangem traditional core wallet. So, that means you still have to deposit. There's still a barrier to do such thing. So, why not? Basically, how it works is a little bit like two separate companies, two separate payments, instead of the using the USDC from the core wallet. If I got that part correctly.
So let me demystify a couple of things. So number one is, yes, it's out for public now. We have had a tremendous adoptions in the past weeks. So we've been out for about 3 weeks now. We're slowly rolling out to different countries. I think by now we're covering about 50 countries. And the idea is that we serve, the largest countries that today have crypto adoption and market. The personas that we're interested right now are those with digital assets balance. Not yet, my dad. We need to evolve a little bit more for that. Right now, it's more those that are using centralized exchange to keep their money. And we want to offer them a good exit, move your balance into your account linked to your hardware wallet, and then you can actually keep your wealth protected. And once you want to spend it, it's 5 minutes to spend for the first time, which is the KYC process, and then afterwards, it's 2 clicks to spend. So that's number one. So when you say we have 2 companies separate, my way of putting is slightly different. We still live in the world where people are extremely worried about being, anonymous, and the hardware wallet is an anonymous product. We don't want to know. It's not, it's a hardware wallet. It's a key for you to keep your wealth protected. So nobody else should have access to this, or only those that you want to give access to should know that address XYZ belongs to the individual. And then Tangem Pay is actually sitting on the outside, or we passed the border of known. And we need to know who is the person and where the funds are coming from. Because if you want to participate in a real world economy or traditional economy, those are the requirements for 99% of the countries in the world. And in order for us to build a product that could function in the traditional world, we need actually this configuration. So we created separate entities. In fact, we started, by actually having a business called Paera. And that business, Paera, was very much later, 6 months later, acquired by Tangem. So we could have this unit sitting inside of Tangem Group. But they are separate entities, separate teams, separate systems. One is hosted in the US, the other one is hosted in Europe. It's completely different technologies. And that's the whole requirement for us to actually perform this operation. So in one hand, there's the regulatory part. You must be compliant, otherwise you cannot participate. in this Visa channels. And on the other hand, you have, the traditional DeFi world that you want to give access to. So you can bank with your Tangem hardware wallet, and you're banking with your payment card and other functionalities that we're going to release in the coming months, like ACH, wire, IBANs, and so on and so forth. So
That makes a lot of sense.
yeah,
So,
because
from what I gather, is that Tangem Pay, because still have to comply with the traditional payment side of things, so that's why KYC is implemented. While Tangem, the traditional cold wallet, of course, like being a cold wallet, we care about our privacy. Like we don't want a cold wallet links to the personal identity. So that's why, hence, we are separating into basically two cards, two payment system here. So I kind of want to go back to a 101 question. Like since you are the payment expert, so I want to ask you, like, how do you explain to a beginner? Because since USDC we are spending as some sort of crypto stablecoin, and if we are spending that USDC in a foreign country, like for example, here in Hong Kong, if I want to spend that USDC, like how is that conversion behind, or basically the conversion rate? Like what sort of like oracle does Tangem use?
That's an extremely interesting question because, funny story, these days I tell a bit more public about it. But when we launched Noses Pay for the first time in 2023, in July, we did a transaction live at the FCC stage or main stage. And, and we used the Visa card, and accidentally it was all over the news in over 50 countries, like from China, Japan, Thailand, I mean all over Asia, all over Europe, Africa, Latin America. And the funny part of the story, that we did not have a agreement with Visa to actually do such program, to provide payments with digital assets. And very quickly, Visa then sent us a message 2 days later, because accidentally, again, the head of Visa Crypto posted, "Amazing technology, Visa, congratulations for actually partnering with such player. This is extremely interesting. Well done." And then 2 days later, we got a message from Visa, "We need an urgent meeting in our office because you guys are breaking the agreement on how you can use your network." And there were only two things coming out of that meeting, either shut down or double down. And the interesting aspect is that Visa could not see the crypto transaction. They could only see the dollar settlement going into the Visa account. So the way it works, every transaction is composed of three elements, right? Plus a break of the third one in two pieces. So the first element is identification. You have a card with a name. So, "Hi, Marcos." And you hit the terminal, and the terminal says, "Hello, Marcos, how are you? Can you please authenticate yourself?" Authentication, is the 1, 2, 3, 4 password that you are granted with. And then you put your password, and then the terminal says, "Perfect, you're authenticated. Now let me validate if you have actually the balance to take the goods and leave the store," right? So we call this authorization request or authorization. And then within authorization, the message goes all the way from the merchant to the issuer. So my bank, let's say Barclays UK, and I am in Hong Kong, I'm going to use, a terminal from Verifone in Hong Kong, and that message hits the acquirer in Hong Kong, that hits some sort of a gateway, some Visa. Then from Visa, it finds another gateway that then finds the issuer, and and then the issuer process this transaction. And if the funds is there, it says good to go, return with an okay. So authorization request, then authorization response. Response goes all the way back to the merchant, says, give the goods to Marcos, and he's good to go. All of that has a maximum limit of 11 seconds, but the industry standard is always to be below 5 seconds. And if you pass 2-3 seconds, the players in the network might drop the connection because you're taking too much time from that processor engine, right? So it's very strict, very, documented, ISO. So we needed to introduce another variable, which is to verify balance on chain, authorize against balance on chain, and then send a message back. So instead of stopping in the issuer, I needed to say this card number actually have a blockchain address. Please check if the blockchain address has funds. And the other complexity was it's decentralized, meaning we cannot simply go and say, I'm taking this because you're trying to make this transaction. I had to make an agreement through smart contract that every time a transaction would come through, if authenticated in the right way to avoid liabilities in the traditional network, the user would transfer these funds to the network. However, having two transactions like, authorization coming in, then, let me check my phone. Okay, I authorize, and then sending it back. It would obviously, even the fastest guys on planet, it would have a shutdown for timeout. Too long to make such transaction. So then we created a mechanism to automate this with the user. We call it the roll-up rule. Essentially, if the user says up to this amount, I'm okay to make this transaction. So he pre-authorized transactions. And how do we keep it secure? With the authentication. Without the authentication, the balance will never move. But if the authentication is proven to be right, the balance moves. So long story to explain that we had a bunch of other complexities to guarantee the money would move. Because in traditional payments, you're just giving a liability receipt from the issuer side that he will pay. In crypto, you're actually moving the funds. So we kind of broke the complete paradigm of payments. Payments were instant from that moment onwards. Payments was not something that would take, weeks, months to be settled, depending on the type of transaction. And then the last mile, which is related to your question, how do we transform then the USDC balance into the actual USD that is coming from the terminal? Because $100 comes in, then I need to remove 100 USDC, and then I need to convert that 100 USDC into 100 USD, and then pay the schemes without touching the money. Because if I touch the money, then it's centralized. So we made agreements with different networks, and that's one of the reasons why we decided to use Polygon in this case, that we would have this subsidized gas fees, so the user can actually make $100 equals to 100 USDC. So as long as you have USDC in your account, the card will always recognize this one-to-one. And that is the only way for us to actually mimic and behave like a bank account. So in my view, Tangem is one of the largest private banking accounts that is going to be available, or it is available right now through cards, but in the coming months with also financial rails connected to it. So you can, transfer funds from USDC to USD accounts You can actually pay with your card. You can go to an ATM, withdraw money. You can invest. You can stake. You can do a bunch of composable financial products because we created the ecosystem for it. That is interruptible with traditional world. I live on on-chain banking since 2023. I barely use my traditional banks. I only use because you have to keep them. But all my transactions daily, it's using my decentralized wallet. So I use my Tangem Pay these days.
Amazing. So thanks for breaking that down so plainly and simply for our viewers. So I do have a few more follow-up questions. Can you walk through like the basically as a user using this Tangem Pay? We talk about the gas fees because USDC is on Polygon for Tangem Pay, from you just told me, and Tangem is actually subsidizing that gas fees. Like, do you guys have plan to keep doing that for I don't know how long, for years, or that cost will eventually going to go back to the users? Or what exactly is user paying in this scenario? Are they paying the gas fee in the future or the FX spread? Any hidden cost for Tangent Pay?
So if you are operating in a US dollar market, $100 equals to whatever 100 USDC you have in your account. It's one-to-one, no fees. And as long as I am the CEO of this unit, I will not change that, because in my view, if you change that, you are basically killing the banking experience that we want to provide to our users, right? We don't want to be a bank. We don't want to have a bank license. We want to make sure that people have access with their funds in the traditional monetary world. So it is an agreement between Polygon and Tangem. We're both subsidizing this, gasless transaction. If you are transacting on a different country or a different currency, then you have the schemes effects. Tangem does not add any additional revenue in that effects. We simply pass through whatever the schemes charge us, we give to the users. And that's why a lot of the users have been, posting online that Tangem transactions internationally is so cheap. And the idea, again, also to keep it like that for now. We don't see the reason to change this. And if you recall in the beginning of our conversation, I am not the type of guy that will build a non-sustainable business. It has to be profitable. It needs to grow. With profitability, it shows that we can actually do something great. And we are making revenue out of those transactions. So in payments, every merchant has a discount. We call it merchant discount rate. And this merchant discount rate is set by Visa, MasterCard, American Express, Diners, JCB. So any of the schemes or the payment schemes out there, they have their own rules around how much is going to be discounted. And out of this discount, there is a split between those that provide cards, those that provide terminals, and the actual payment network. So we make money out of this. In theory, my objective, and it's not in theory, my KPI for the business is to ensure that we increase volumes. The more transactions day to day, you want to help Tangem, use your card, gas stations, supermarkets, small shops, buy goods of very small ticket. Because the more you spend with your card, the more we get, these tiny fees, which for you, user, it will make no difference, as this is discounted on the merchant side from the revenue of the merchant.
Yes, that makes a lot of sense. So, final question I want to ask you before I let you go. In the next 3 to 5 years, where do you see Tangem Pay going, or maybe anything very exciting that you're very looking forward to build with Tangem Pay?
The most exciting thing that we can have is, onboarding in 1 minute, meaning that you have to go, like you go through your KYC in 1 minute, issuing cards in nearly every country, and ensuring that we keep transactions monitored to the degree users can be whoever they are without having to speak about it. My main disruption goal is to this simplicity. It will come with perks. The more you use the card, the more you get back from us. Not at this stage, because at this stage, for me, I think we have a bigger problem to fix, which is everyone, we have over a million active customers. Those active customers, they have balance. They want to move that balance, into spending. And I need to give those guys, our main customers, this journey, very simple journey, like frictionless journey. If I'm able to achieve that in the coming, years, I expect this to take more than a year. We will differentiate ourselves by providing, local perks, like, US, people worried about consumption, Europe, people worried about deposits and investments, LATAM, people worried about lending, borrowing. So you have different regions, different needs. And we want to make sure that we create composable offers that addresses local markets. So the more local look and feel, the more global account we can be. If you actually think, so let's use a Hong Kong bank, HSBC, which claims to be global. If you actually go to a branch of HSBC in Brazil or in the US, you have to do KYC entirely again. You have to explain where the origin of your funds came from. So it's not a global bank. It's a global brand with local branches. Whereas we can actually be a global bank where users don't have to justify, who they are, how they earn their money every time in every country they want to offboard. If we do it once, we should activate multiple regions, and some of those regions or countries can ask for enhanced documentation, but it should be enough for you to actually, have a global bank account. So you open an account with Tangem, you can issue one card, and you can transact multiple types of currencies. You can transfer multiple types of balances between multiple countries, without having to go through the experience of each country. So global citizens, we're coming for you. You're my number one goal priority, because if I serve you well, I can actually serve the locals extremely well as well.
Sounds very promising indeed. I'm sure a lot of our viewers are looking forward to that feature on Tangent Pay. So, Marcus, I really appreciate your time and talking with you. I learned a lot during our conversations. So, for our viewers out there who wants to know more about the update of Tangent Wallet or Tangent Pay, or maybe just get your personal takes about the market or payments in general, where's the best way to reach out to you?
Well, if you don't have a hardware wallet yet, I obviously I'm very biased about it because it's easy to use, easy to get it. So I would always start from the hardware wallet. Very soon we're going to have a solution without a hardware wallet, but I would still encourage you that hold, more funds to always protect your wealth. If not yours, if not your keys, not yours. So bring out of decentralized, centralized exchanges to yourself. So start from there, and then you're gonna see a banner once you open the Tangem app. Hey, download your card now. It's free. You can start using immediately. We're bringing tiers cards, which is more exclusive products with cashback points and perks that actually addresses our customer needs. But we have the freebie. It's available to anyone that holds a hardware wallet and balance on a protected account with Tangem. So come to our website or come to our phone and download the app, and you should be able to get it.
Yes, I like that. So viewers out there, do join the troops, because I'm a personal user of Tangem Wallet and it has been amazing. So hence I still got the ring on my finger. And if you guys are looking for a discount code, there's a discount code available in the description box below. So GEM10, so GEM10. Anyway, so Marcos, it has been great to have you here on Roxham TV. And for viewers out there, thank you guys for watching. My show live is Monday through Friday, 3 a.m. Eastern Time. So thank you guys for watching. I'll see you guys tomorrow.